Welcome back to the CNBC TV 18 special. We're in conversation with Ruchir Sharma on his latest essay that politics in India have no connection. One of the arguments that Ruchir makes in his essay has to do with encouraging investments. In fact, he says in India and in as many other countries, investment growth has been weak since the global financial crisis of 2008. The main reason India is still growing at a decent clip is because of strong consumption. In fact, the share of private consumption in the Indian economy has grown from 55% in 2008 to 60% now. Well, Richard, we talked about the consumption boom that India is witnessing, but on the flip side, the investment decline, which continues from 2008, that's a big cause for concern.
Yes, it is, because if you look at the economic research, it basically shows that booms which are led by consumption tend to be much more short-lived than booms which are led by investment. The Bank of International Settlements has done a lot of work on this, and so that has to be one of the risks. As I said, my overall scenario for the Indian economy is steady as she goes, that the economy will continue to outperform other emerging nations with very little macroeconomic volatility, and the stock market too is likely to follow the same path. But if we look at the risks in terms of to that view, I think the biggest risk has to be that private investment is in fact much weaker than even what the overall numbers show, because the overall numbers sort of take both private and public investment, which is by the government. And a lot of the investment...
that's been what we've seen. I mean, the government is basically trying to spur investment.
Yeah, and the private investment numbers are in fact negative. The latest growth rate numbers are, are quite sort of worrying that way. And that's also one of the reasons why I think that job growth has been another concern. The data on jobs growth is in India not very reliable. We don't know what exactly to take. But overall, if you look at it, jobs growth in India has been obviously quite weak. And one of the reasons for that is that if you look at the miracle economies from China to Korea to Taiwan, Japan, they all created massive jobs growth in the back of manufacturing, because manufacturing is where the jobs typically are. And because the manufacturing sector and investment is not doing that well, jobs growth is a concern. But so far, as I said, that the economy has been driven by consumption. In fact, the share of private consumption in the Indian economy, I don't think has been as high as it is now. About 60% is the share of private consumption in the Indian economy today. That's about the highest number I can remember for India in a very long time.
So what will it take to break this sort of deceleration and decline that we've seen on the investment side? For instance, the twin balance sheet problem continues to persist. We haven't seen any significant deleveraging at this point in time. How do we kickstart the investment cycle?
Well, I don't think anybody has a magic bullet to do it. So I think that this is one of those things where over time this will just be healed. That time's a great healer. I think we're going to find the same thing out here, that there's going to be no quick fix to this, and this is just going to gradually come up, and you've got to hope that there's some global revival in the investment cycle, because even the global investment cycle has been very weak, and you hope that India will catch those tailwinds and do well. But do I expect anything to happen on a domestic basis in a very urgent way to kickstart this? As I said, that my expectations of anything being kick-started by the government are very low, just because I don't think that's the way the Indian economy or the Indian polity functions.
So, you talked about job growth, you talked about the investment decline being some of the risks that the Indian economy is faced with. You're absolutely right on the macros. I mean, we find ourselves in a sweet spot today. But if you had a wish list, whether it's incremental or big bang, forget about that. But if you had a wish list in terms of what you would like to see both the private sector as well as the government do today, what would it be as we celebrate 70 years of our independence? I mean, what is it that you would like to see?
I think that this is one of those main reasons why I wrote this essay and why we're having this conversation. It's to drill it into our heads, my head as well and other people's heads, that every time you bank on the government to do something, you're likely to be disappointed. And this has got nothing to do with this government. It's the history of the way India has governed. We just don't govern that way because as I said, when the government first came to power, the biggest sort of problem I felt, the fall time which I wrote about, had to do with the entire banking sector problem. And here's the problem, that there is no other country in the world, possibly with the exception of North Korea, where the public sector's share in the banking system is as high as in India. And I've had, in the early days, private conversations with some of the policymakers about how this needs to be changed. Because in India's case, 70% of the banking assets 3 years ago were held by the public sector. In the average emerging market, that number is close to about 33%, one-third. So we are that out of whack compared to other countries. And the answer that the policymakers would give me is that, no, like in India, if you were to do this, it's a sure way of losing elections. There'd be too many protests, there'd be this, etc. And we need the public sector, like in India, to finance all sorts of social objectives.
Yeah.
And my point was, yes, you can do that. But your share doesn't have to be as high as 70%. And here we are, 3 years later, with a slight decline in that share, which has nothing to do with the government. It's because over the last 3 years, 2/3 of all the incremental lending
has been done by the private sector.
Exactly, has been done by the private sector. And so this is what I call has been India's trait, which is privatization by malign neglect. That's the sort of term I've coined here because that's how it functions. You spoke about Air India's privatization, finally, right? So like after the assets have been virtually beaten down to pulp by being mismanaged for the last 20, 30 years, we're going to finally privatize it at some rump value and just to make sure like it doesn't bleed the exchequer anymore. But will there be any preemptive privatization, which is that you'll basically privatize something anticipating that this sector might sort of lose favor or the company may not do well? Never. That just doesn't happen. There's no preemptive. This is that when you're just completely forced to do it, you will do one privatization and then make a big deal about it. So that's just the nature of how we function. There's nothing preemptive. So I think that the defining reform characteristic of this economy is almost, which is privatization by malign neglect, that over time, sectors get privatized. Telecom got privatized in a similar way. Airlines got privatized or the sector got privatized in a similar way. The banking sector, something similar is going on, which is that there will never be a quick fix. Yet the public sector banks will keep losing value over time. And again, from a stock market perspective, over the last 3 years, the shares of the private sector banks have done staggeringly well. How much of value has been created out there? Whereas the public sector banks have seen virtually no appreciation, even though the market's gone up, and after they had fallen a lot already in the preceding 3 to 5 years. So I think that's India's sort of reform trajectory for you, which is that it's basically privatization happens, but by malign neglect.
Okay, so let me end then, Richard, by asking you. So your advice to people who are watching this program is don't follow the politicians, track the 30 or 40 top Indian companies for cues on where the Indian economy and the Indian markets are headed.
Yes, and of course follow global cues, because as I said, that remains a very powerful determinant of how the Indian economy and how the Indian stock market behave. And when you sort of bring it down to the next level of implementing that view, then sort of stick with these 30 to 40 quality companies that you have in India. And of course, the list can change over time, and it does. But sort of if you follow these basic metrics, you'll find there's a huge sort of cohort of companies available in India which other emerging markets don't have. And do not let your ideology come in the way of your investment and your economic decisions. Because if you do that, that is a sure way of losing money in India.
Separate ideology from investment decisions. But very quickly, Ruchir, the new investment math.
Yeah, now I speak about this like in the book, which is the new math of economic success. And that is the fact that everywhere across the world, growth today is much lower than it used to be. So you have to bring your ambitions down accordingly, like the United States or the developed world. A decade ago, we would have said 3% was a pretty sort of good growth number there. Now it's virtually impossible to find any developed countries growing at a pace of more than 3%. Some handful of small economies in Northern Europe and stuff like that you'll find. So that baseline is down to 1.5%. At the other end of the income spectrum in emerging markets, the number of economies now growing above 5% is quite limited. So if you grow above 5%, that's a pretty decent outcome. So both for growth and even inflation, we haven't touched upon inflation. There's been a big sort of decline in inflation in India over the last few years, and that's commendable. But if you look at it, this again is very much a global trend. That for a while we deviated from this global trend in the first few years of this decade because of the kind of policies the previous government was following, which were quite inflationary in terms of the increase in minimum support prices and other policies. But now we have once again reconverged to the global averages. So yes, we have seen a big decline in India's inflation rate, but for me it's almost a reconvergence with the global growth rate. So if you look at India's rankings on the inflation front across the world, you'll find that we have basically gone back to the average inflation rates of the other countries. And that's been India's trajectory for a long period of time.
Okay, so reconvergence on the inflation front. Ruchir, it's always a pleasure to have you on the program. Thanks very much for joining us and discussing your new work today on why politics doesn't matter to economics in India. From all of us here on the team, we hope you enjoy watching this show. Thanks very much for watching.